Rich Greenfield was on the call, joins us now. Highlights here, Rich.
Stunning. Like Melissa, just stunning. Running away. Like we talked about sort of escape velocity. Like they're leaving the rest of the industry in the dust. I mean, it's sort of hard to imagine. They just added 19 million subs. That's more than they added in the quarter after COVID hit in March of 2020. I mean, they've never added 19 million subscribers. And sure, they had the big Tyson Paul fight. They had the NFL on Christmas, but it wasn't like any one of those was the overwhelming driver of that many subs. I mean, they probably added 5 million subs in the U.S. I mean, or 4 to 5 million subs in the U.S. Like, that's just a crazy number when you think about it. I mean, they're up to 80 million U.S. subscribers. The cable TV universe is down sub 70. Netflix is at 80 and still growing in the U.S. That's sort of hard to wrap your arms around.
So just taking a bigger picture, I mean, oftentimes we like to look at Netflix in the world of streaming, but in the world of media, Rich, who else are they stealing from? I mean, they're gaining, and those eyeballs are spending less time watching other things. I mean, I think you made the point that the average viewer watches, 7 movies a month on Netflix, which just seems like a staggering amount. That's a lot of time that one has to sit in front of a TV every month.
Well, you know what, Melissa, I think it's really an important point, because when you think about what do tech companies do well, I don't care whether we're talking about Netflix, Spotify in the audio world, Meta, Google, like all of Amazon, clearly, all of these companies, they are laser focused on one thing: time spent. They don't want Melissa and Rich. They don't want us ever leaving. They want to keep giving us more to do, more ways to spend time on their platforms. That is not what you're seeing out of a lot of the traditional media companies, right? They're pulling back on the amount of content. They're trying to get to profitability or squeak out a little bit of profits for Wall Street, managing quarter to quarter. They are not gunning it for time spent and really focusing on making sure you never leave. If anything, they say, here's one episode, come back for the next one, the next thing to watch next week or in 6 months or whatever it is. Like, there just isn't enough content. And I think Netflix, what they showed this quarter is their investment in content is directly driving engagement, and it's leading to more subscribers and obviously an increased willingness to pay more because they're raising price today. And I don't think anyone's going to be complaining about the price increases.
Rich, Karen, thanks for being on. First of all, you've been loving this name probably since you were a little boy, before maybe even existed. So extraordinary quarter on so many metrics. But at some point, it's what is something that sort of makes you think, wow, it's sort of getting too expensive? A metric has to change for an underlying business, or a stock price that makes you think, all right, maybe we got to be neutral?
Karen, let's just go back. I mean, it was only a few years ago, right, that growth sort of stopped, right? Like they hit a wall and they were really starting to struggle. I mean, it was a very different competitive landscape. I mean, that was a point in time. And I think if you were to look back, the one thing Netflix management, and this was more in the Reed Hastings era, I think the one thing Reed made a mistake on is he didn't expect so many media companies to do something so uneconomic, meaning lose billions of dollars year after year. I don't think he anticipated that. And that crazy amount of spending with no line of sight to profits, I think was sort of the hiccup in Netflix. And they retrenched. They went in and dealt with password sharing. They went back and launched an advertising tier, and it's been off to the races since. But there certainly have been, what I would call air pockets that have sort of caused concern and fear among investors. I think what's different now, Karen, is that now you're at a point in time where Netflix is putting more money into content. They just did WWE. They just did the NFL. Like, they're investing more and more. They talked up their desire potentially for something like UFC. I mean, they didn't say it specifically, but they certainly want more live event content. UFC becomes available over the course later this year for a couple of years out. Like, there's more content available. Netflix is leaning in while everybody else is pulling back. And so it's hard not to get excited when you see that sort of dispersion in behavior. Netflix getting stronger, everybody else recoiling.